Another spectacular rally in crude today, with oil prices hitting 7-year highs. OPEC said it is sticking, OPEC Plus, sticking with that policy of increasing monthly production, or increasing production each month by 400,000 barrels a day. I guess says it's really not a stretch to have WTI at $80 before too long. Bill Baruch joins us now, President, Blue Line Futures. Bill, I know nothing is certain in the markets, but you can see an 80 handle for oil pretty soon.
Oh, that's a hop, skip, and a jump from here. You know, we've been looking for 80 bucks, you know, a few dollars ago. I mean, we were looking for 80 bucks as this thing was bottoming out near 70. I think I wouldn't be surprised to see it surpass 80. And you got a nice wave. This is ultimately a breakout. We're now trading out above the highs earlier this year. We're at the highest level since November 2014. Goldman Sachs is calling for Brent to get to $90, and Brent's back through $80 this morning. So if we're talking another $5 to $10 from here, I mean, we could really be thick into the 80s. But I'm going to go even further. I mean, I've been saying for the last 6 months, we could see $100 oil by the middle of next year.
$100 oil by the middle of next year. And of course, that hasn't been the case since 2014. Not sure we could put up a 5 or a 10-year chart for oil. But isn't that going to bring on a tidal wave of supply, Bill, as usually happens in the commodity markets?
Listen, there's been a tremendous amount of purchase. Like CapEx has been severely cut. Mm-hmm. I mean, you're seeing the companies throughout the U.S. They were, you know, firming up their dividend, getting cash flow. I don't expect the U.S. production to really ramp up until the middle of next year, and that's why, you know, I think we can run into that. And then you have OPEC Plus today, you know, affirming that only 400,000 barrels per day are going to come back online each month. So they are increasing production, but that's already priced in. And I think that from their point of view, mm-hmm. you know, they've invested a ton of money and they want higher prices in order to get paid. And, you know, from there, too, they're still a little concerned about the demand side as we head into 2022. Mm-hmm. And they're saying that there could be a surplus in the first quarter of next year, potentially. So they're not in a hurry to ramp up production from where their path is already set. And that's why you're seeing crude oil prices react today to their meeting.
I'm trying to think about, I'm an oil CEO, and I guess my fundamental goal in life is to get the stock price higher. I get rewarded, that's what I'm paid for, to get the share price up. Yeah, perhaps the route is just boost the dividend, buy back stock, certainly not aggressively expand my production.
Well, it hasn't worked out year after year. I mean, look back 2 decades now, and you know, the more money they've spent into production, it may work for short periods of time, but it hasn't worked over the long run. Look where they ended up the early part of last year, and this industry needed to come out of what happened last year with some positive tone, and that positive tone was affirming the dividends and getting cash flow and cutting CapEx. That's what we've seen. So I think that underinvestment, you're also is going to be a tailwind, but you're also going to see a tailwind from the policies in Washington. I mean, there's a reason to believe they actually want, until it really hurts, you know, the consumers' pockets, which it's beginning to. They almost want higher prices in order to, you know, push more green.
Yeah, that's interesting. I mean, if you're an opponent of fossil fuels, if you're a scientist who says we got to get off fossil fuels, I suppose this is good. I mean, higher prices tend to discourage consumption, and plus the industry is not rewarded by investors for increasing production.
Well, in comes natural gas, and that's a cleaner fuel, and that's something to really keep an eye on too. We like natural gas to be higher. I'm not saying it's going to be heading higher as crude oil is right now. Mm-hmm. Natural gas has had quite a bit of a move in recent weeks, but if they digest these gains, I mean, $10 natural gas first half of next year is not out of the question. And there's companies that are looking pretty good in the space too as an exporter.
Give us a final trade in commodities, Bill. We've spent the whole show on a whole segment on energy. Any other commodities catching your eye right now? We've got about a minute left. Sorry, go ahead.
We like commodities broadly right now. We're positioned long crude oil, gold, coffee, and coffee is something we don't always talk about. But you know, you're seeing the crop in Brazil was deteriorated pretty bad. They could have lost up to a quarter of that. It could take a year or two to start to recoup that. Supply bottlenecks with another producer as in Vietnam is also slowing too. So we really like coffee is higher. We like commodities in general. The dollar index, which is 57%, the euro. Did spike into the end of Q3, but it's not uncommon to see the dollar or any currency move sharply into the end of a quarter. So we're seeing it fall back, and if the dollar continues to weaken, that's going to be a very big tailwind to commodities. That's the reason why we like gold. Gold is performing today, despite the equity market down. It's seen this decoupling. Usually, you've seen gold kind of be in the undertow of risk assets. And now gold is trading higher today, breaking a downtrend line. So we like being long crude oil, like being long gold, like being long coffee for some additional upside.